Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Monday, April 4th, 2011. This morning I'm asking, is it time to raise rates? And those questions are going to be answered this week as we have interest rate policy meetings taking place from a bunch of different regions. First on tap is Australia. Okay, tomorrow they're coming out with their rate decision, and they are expected to hold interest rates steady at 4.75, which currently is the highest among the major currency pairs that we follow. Now, one of the things that's going to be important about this is you can see here from this chart, 30-minute chart, that Aussie's been reaching new all-time highs against the dollar on a daily basis. I think it hasn't been as high in something like 30 years was over here. Now we're at all-time highs. We're up to 104. You can see we just pulled back a little bit. I've run a Fibonacci retracement for the short-term move here on a 30-minute chart. And it's possible that with the rate hike not coming tomorrow, that we could see a pullback here to this 103.34 area. But the problem is that the market's already priced in a lot of this, leaving rates steady. So it's going to be interesting to see what happens there in Australia. But right now, the Australian economy is still flying along. They're doing very well. They've got the advantage of higher commodity prices, particularly gold, okay, as well as the Chinese growth story there as well. So that's been no secret. So Australia is going to keep rates steady this time, but it's going to be interesting to see when they might hike again. And some folks are saying they may be able to keep it steady for the rest of the year, but we're going to have to see how inflation goes from that. A lot of that depends on what the U.S. Fed does. All right, next we've got the UK. They're coming out with their rate decisions. Let's take a quick look at pound here. Okay, as you can see, 30-minute chart, pounds been a little bit of range here, but mostly higher. All right, you can see we got down to about 159.50 here just the other day, and now we're pushing up a little bit higher. Now, the expectation is that they're going to keep rates steady in the UK. All right, and with the steady rates that they're going to have, this is coming out, I believe, on Thursday. All right, they're going to announce their asset purchase target plan and the rate decision. So if those stay steady and they don't come out with any hawkish comments, all right, then we could be in store for some pound weakness here, because the inflation hawks are out in full force and they're saying, hey, look, you definitely have inflation in the UK, and perhaps they're taking this wait and see approach where they're hoping that the economy slows a little bit, so that the inflation will subsist. They're hoping that higher prices themselves will keep people from buying, thereby reducing demand, trying to move it lower. But at this point, they don't have any intention to hike rates. But let's just go to the euro here real quick. Now, the euro, just want to show you here on a little bit longer of a chart. Let's just look at the daily. Okay, euro's had a great month. You can see here just a steady rise higher, and even back from mid-January. Okay, euro's been up roughly 3.5% across the board, which is the best performer for the first half of the year. Now, what we're also looking at with the Eurozone is they've got their rate decision as well, and the actual expectation is that they're going to hike rates a quarter of a point to 1.25%. Now, this brings into play a lot of the things I've been talking about the past week, where higher rates are going to hurt the peripheral countries that have these debt problems. That's Spain, that's Portugal, that's Ireland, perhaps even Italy. Greece is somewhat nestled in there in that they were first to take the bailout, so they have their terms set already. But Ireland and Portugal particularly are on the hot seat right now. So if they do raise rates to combat inflation, that could be an issue there for the Eurozone. But as you can see here, looks like we got to a high of about 142.50. All right, we're just approaching that again. I could see us, just sitting in here a little bit. But this is on Thursday, so we could see some decent movement, perhaps up to 143, 143.5. All right, before this interest rate announcement. And while the market's expecting that rate hike, it doesn't necessarily mean it's going to come. So if we don't get the rate hike, then we'll also see some euro weakness as well. Real quick, let's just look at dollar yen. Okay, dollar's been strengthening versus yen. We all know the story in Japan. They're still recovering from the tsunami, the earthquake, the nuclear crisis. They've got G7 support to keep the yen weak. So I'm guessing that perhaps by the end of the week we may see 85. So the next question is like, well, what's going to happen with the dollar? And that's really the story that's been going on here. Now, we can talk about these individual countries and regions like the Eurozone and the UK, what they're doing. But until the U.S. does something about rates, everyone just has to sort of grin and bear it. Now, we all know that QE2 is supposed to end here in June. All right, we got the employment figures that came out on Friday, non-farm payrolls that came in slightly better than expected. They weren't world beaters, but it was good enough to show that the economy is moving in the right direction. Now, Bernanke is most likely going to have to withdraw the quantitative easing, and at that point, it's going to be interesting to see whether the market can stand on its own 2 feet. So, if we do get some dollar strength when that happens, and I think that we will, that can potentially push some of these currencies a little bit lower. All right, bring us back more into level. What's going to be interesting is to see whether stocks and commodities will continue to go higher. My feeling is that commodities will start to come down a little bit lower. All right, we actually have oils up to a 108 handle today, which is pretty high considering that super spike that we had a couple years ago up to 140. We're it seems like we're getting closer by the day. And gold's sort of been meandering around. It's up today, but it's about 1435. We could see gold and the other industrial metals pull back a little bit, but I think stocks are going to continue to go higher regardless of what the Fed does with rates. I mean, even if they start in a tightening cycle, it's going to be a while before rates are normalized, and people are going to be saying, hey, treasuries look like a great investment here at these levels, compared to where they were, sure, but going forward, I doubt it. So that's going to be interesting to see what happens. So keep an eye on these rate policy meetings this week, and we've got Fed minutes. They're going to release those as well. That's when's that come out? That comes out Tuesday afternoon. So we'll see what they're thinking down there at the Fed. But with the Fed, you have to you can't really listen to what they say. You have to just see what they do. So that's what I've got for this week, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.